we're going to talk about credit cards and the absolute basics. So for someone who's only used a debit card, how is a credit card different? Can you explain in the simplest terms?
Yeah, a credit card is not your money. So there is a credit company will give you a line of credit which you can use to spend, which you need to pay them back. So it's a way that people can extend their ability to spend. But that credit company is going to want that money back. So as long as you're repaying them on a monthly basis, then it could be a really efficient way to facilitate any of your spending. But if you're not paying them back every month, there's normally a fairly high interest rate attached to any payments that you've made that don't get immediately repaid.
Okay. And can you break down the key terms that they need to know, like what a credit limit is, a billing cycle, a due date?
Yeah, so a credit limit is the amount of credit that a credit company would give you. So typically you'd see on the sort of standard illustrations that they might give you when you're applying for it that there's a £1,500 credit limit. That effectively means that you could spend up to £1,500 on that card before you're going to max out what that card is going to borrow to you. So what were the other two terms you said?
Billing cycle and a due date.
So billing cycle is just essentially how often these bills are coming up. So if you started on the first of the month, for example, then credit company is going to send you a statement every month. They can say how much you've spent. There is normally a minimum amount that you need to pay back. That would be highlighted on your as part of your billing cycle, and yeah, that is going to be normally 2% of the balance. Ideally, you want to be paying back a lot more than 2% of the balance, because anything that you don't pay back at the end of the month, you're going to pay interest on.
Right. So the minimum amount, is that designed to be more than the interest itself? Is a 2% typically more than the interest itself?
I would say that's typically less than 10 times what the interest is. So the interest is probably typically around about 25%.
Right.
Maybe more. Depends on the credit card, of course. And you might be able to find one which is a lower interest rate, somewhere between 15 and 20%. Still a considerably higher amount than the minimum payment. And obviously the minimum payment is on the entire balance.
Right.
As is the interest, but the interest is monthly. So that headline APR figure you see, let's say it's 25%, for example, that is billed monthly, but proportionately. So it'd be a 12th of 25% every month of the balance at that date that the interest is due.
Okay. And the due date is a certain date every month. And if you go past that date, there's also repercussions?
Yeah, there are. So the due date is the date that you have to make your repayment, which is monthly.
Yeah.
If you go past the due date, they'll normally give you a few days to make your payment, but it would be classed as a late payment. Not so much a missed payment. When you get to the missed payment stage, which is normally a few days after the due date, that's where that's going to show up on your credit card, your credit score. Okay. So your credit reports, which will have details of all of your payments you make to credit companies. If you have a missed payment, that's going to stay on your credit score for a long time and will detrimentally impact your credit score.
Can you say long time as in years or?
Yeah, it'll be years. It's normally like a 4-year cycle.
Okay.
It might depend on the credit agency that you're running through, whether that's Equifax or
Experian.
Yeah, one of those. There's a credit score. There's a few of them. But yeah, that'll be on there for a while, and you don't want any of those really on your credit score.
Okay, so
report.
You do have a few days grace.
You do, yeah. So they'll let you know. They'll say, look, you've missed your due date. You need to pay this by this date now, which is normally a few days later. Okay. If you miss that date, we're classing this as a missed payment.
Okay.
There's other things as well. If you miss a due date payment, for example, they could remove the. Maybe you've got some special terms. Maybe you've got a period of time where you've got 0% on balance transfers or 0% on purchases, which is effectively you could have a credit card that gives you 0% on purchases for 12 months. That means that for the 12 months of use of that card, the interest rate isn't 25% or whatever it might be. It's actually 0%, but only for that 12 months.
Yeah.
However, any benefits or things like that they might be offering you when you first take the card out, they could all be removed if you miss your due date payment.
Okay.
So make sure you're understanding the consequences of missing any payments. Even late payments, sometimes they can be removed if there's a late payment, not a missed payment. So you can miss it by a day, for example. I don't know, something could be up with your direct debit, gets cancelled for any particular reason, or there's not enough money in your account to cover the payment. If that's the case, be very careful that you haven't lost any of the benefits, like the 0% on purchases or balance transfers, because that could very quickly detrimentally affect your monthly payments going forward.
And there's such things as late payment fees as well, and so on.
Yes, yeah, there can be. That's down to the credit provider again. Not all of them do that, but some of them do. I mean, some of them are. It tends to be the ones that appeal to people with lower credit scores. They tend to be a little bit more. What's the word? Like sharky.
Okay.
You know, they tend to have all of these additional T's and C's where, any late payments and they'll be charging you for it.
And how do you pay yours back?
I pay mine every month. So in full, I spend on my credit card. So daily things, I have a credit card for my business and I have a credit card personally. So personal spending, I put on my personal credit card. Business spending, a lot of it goes on my business credit card. And then every month the balance gets paid off in full on the due date. And
that is not by direct debit. It's by you just pay it as and when and how much it is.
Correct. Yeah. So that's the only thing which is a little bit frustrating maybe, is because when you set up a direct debit, you can set up a fixed amount or you can set up a minimum payment. But certainly with the credit card provider I have, I'm not able to set up a full balance clearance as a direct debit.
Same.
So I have, I don't have a direct debit set up with it. I just have the day I get paid, which is normally a few days before my due date. One of the first things I do is I clear my credit card balance. So
is that just by memory, you know what day you have to pay it on, or do you have like a reminder set up on your phone? So I get paid on normally the last working day of the month is when my sort of the way I get paid is the authorised firm I work through release the fee payments to my limited company on the last working day of the month. The day that hits my account, I'll get notified. Pretty much the very first thing I'll do there and then is go onto my credit card app and I'll clear the balance. Okay, so that's just all on you. There's no real reminders. Other than a notification to say I've been paid. Okay. No, there isn't. And again, maybe it's just my credit card provider. Maybe the others you can set reminders or you can set. Well, saying that, I do actually get emails from them saying your due date is approaching. But I don't know about you, but emails sometimes get lost in the floods that you get. Because I mean, 100%. Everything wants you to sign